Hey everyone, my name's Andy. My channel is Finding Value. If you like making money, subscribe to the channel. I go over a lot of undervalued assets and potential investments based off of ratio investing, which is just comparing assets against history. And if that interests you, subscribe. Give me a thumbs up for this content and leave comments, questions below on anything that you guys have. I'm going to go over an overall market update. I'm going to touch on the 10-year yield, the NASDAQ, S&P 500, the Dow. I'm going to look at some of our ETFs that are good, clear indications of some of the sectors that we have in commodities, and then I'm going to go into ratios. So let's jump in here, do an overall market update, show you what I'm seeing. Again, the 10-year, the major indices, commodity ETFs, and then some of the ratios for value. So this is the 10-year Treasury yield. It is continuing to increase. It was up about 5% today. This is going to put pressure on the overall stock market. You're going to see that in some of the next charts. It's signaling that I think we're going to have inflation, or inflation's already here. So that's what it's signaling. People are selling bonds. They're getting the heck out and rotating money into something else. This is the Dow. You can see the Dow. We got a little wick at the top. I bet you it may pull back on a short-term basis. It doesn't, I think overall, looking at it from a medium, like short-term to medium term, I do think the Dow is going to go higher when the economy and people really start getting back out into the economy, spending more, traveling more. So I think this spring, summer, I think this is when it's going to start, and I think the back half of this year is going to be pretty strong. That's what I think. Now, the composite, the NASDAQ composite, it doesn't like increasing interest rates because that's what discounts all these really high growth stocks. They're getting discounted back with a higher interest rate. And when you discount them back with a higher interest rate, you get lower net present values. Now, some people argue that the interest rates were never accounted for in the NASDAQ going up. I would probably argue that it doesn't matter because when other sectors go up, I think money's still going to chase returns in other sectors and draw money from other ones. So what I see here is I see big bearish engulfings everywhere coming up and the momentum changing. And now we're seeing that momentum still kind of head back on down. How far will it go? Is this a potential top for a while? I don't know. But it looks like a toppy pattern to me. And this is the S&P 500. It's kind of a mixture between the composite and the Dow. Maybe it's pulling back to here. I don't know. This thing doesn't look all that great, but it doesn't look absolutely horrible either. So I'm kind of indifferent on this one here. So this is GDX. We're getting into some of the ETFs that we're liking. This was a small down day. We've got a big bullish engulfing before it. I think it still looks absolutely fantastic. I think it looks great. Same with GDXJ. We've got the small down day next to the large up day. That's what we're looking for. So I don't think anything looks too bad there. Nothing's out of whack. Now we've got a large down day on the oil service companies. We had oil go down quite a bit today. So obviously we're in a pullback. We ended the day with a lot of momentum to the downside. It could potentially pull back even more, is my guess, until this momentum is worked off. But long term, I'm not selling. Again, I'm going to reiterate, I'm not selling anything. I'm not trading in and out of these stocks. I think long term, these things are going to do absolutely excellent. But in the short term, we're going to come under pressure, and I think we're going to pull back. XLE, same thing. We're in a pullback right now. Now, I don't see any like gigantic bearish engulfings here. I see one dark cloud cover here where we kind of came back up, contracted, and then we're kind of pulling back here. I don't think this is a blowout top or anything like that. I think we're going to continue to move to the upside. We've got the 50-day, the blue line crossing the 200-day here. So momentum's to the upside, but very short-term momentum's to the downside. So short-term downside, medium to long-term up. That's what I'm seeing. Same with North Shore Global Uranium. We were going good. We hit some resistance. There's some sellers up here. That's why the wick's at the top of this guy. We came around. Looks like we got a little bit of a bullish, a bearish engulfing, I should say, which means we could head back down a little bit. How deep will this pull back? I don't know. It all depends. Maybe we just head back a couple days and that's it. Maybe we reverse quickly and move on up. That's why I'm not jumping in and out of these companies. I'm just sitting in them. Again, we've got some support here. So maybe it comes back just a little bit over the next couple of days. We'll have to watch. What I want to see are small down days that are controlled, similar to this. We don't want to see big old days just popping down next to each other, which is a huge sell-off. But I don't think we'll see that. Here is the rare earth strategic metals. We're still grinding out sideways. It looks decent because we kind of popped down. This is the first move down, then we came back up. And then the smaller move down, smaller move up, smaller move down. You might see this kind of go into what I call a dead period, where things are kind of equaling each other, the buyers and sellers. And then we're going to see which point it decides to go up or down. I think it's going to go up because I'm bullish long-term on the rare earth metals. If we're going to build all these electric vehicles, which are really in the near term here, I would like to see this rare earth strategic metals ETF go up. And I think it would go up. Here's the Global X Copper Miners ETF. We're seeing a similar pattern as the rare earths. We kind of get this pullback here, then we get a pull up, and then we're kind of, I should say, we are coming into a pattern where the buyers are starting to equal the sellers, and we're contracting. We're contracting up, and we're coming to this kind of dead period where the buyers equal the sellers, and the candlestick bodies are very small in size, and they kind of just go sideways. That's where I like to buy because it signals that the pullback is done and that we're about to go higher. And what really signals it, if we see that the buyers equal the sellers, it comes sideways, and then we see an opening down, and then everyone buys it and puts a big, huge bullish engulfing on the end of this, then I would be very bullish on it. This is the Dow to gold ratio. The Dow has been outperforming gold recently. It's coming on up. We're kind of in this congestion period all through here at this 19 range. 19 is an expensive price for the Dow and is a cheap price for gold. So historically, 19 has been very expensive. I think this is going to come under pressure as interest rates go up. So I think Dow is going to be slower to go up than gold. So I would think that this ratio would contract or go down in favor of gold. This is the gold to copper ratio, showing that copper is outperforming gold. So we're going down, meaning that copper is the favorable metal. We'll see how this thing works out over the next week or two. It's been kind of chopping sideways back and forth here in a consolidation pattern to see which way this breaks. Now, looking at some of the ETFs, it looked like copper was about to strengthen. We were kind of in that dead period coming up. So what I'd like to see is a couple of these things. I'd like to see gold move up along with some of these other commodities, showing strength across the entire sector. That's what I'm waiting for. This is the gold to oil ratio. Oil obviously got smacked down today, so it's probably coming back up. But either way, oil is cheap in relationship to gold. And whenever oil in that sector bottoms, I think you might see some good buying opportunities. Here's the gold to palladium ratio. Palladium's been on a tear. I think it was up a lot today. It's been diving back down. Maybe we make another kind of double bottom here before we move on up for the gold to palladium ratio. I think this is going to dive down quite a bit today. So you might see one kind of spike down here. Why is palladium going up? It's probably because it's used in a lot of catalytic converters. It has a large market deficit, and palladium's been on a tear. So here's the platinum to gold ratio. Looking at this, platinum's been outperforming gold, moving to the upside. This is looking fantastic. And I think today it was actually up in relationship to gold. So that's looking good. So looking at the overall market, how everything looks, we might see a little bit of a near-term pullback. Looks like it's pulling back on the NASDAQ, the S&P 500, and the Dow. So if that pulls back a little bit, it may drag down some of the commodity markets. Oil's under pressure, that's for sure. It was a big sell-off today. I didn't look to see what the inventory numbers were, but maybe we had a big build or something like that. Looking at uranium under pressure. We could pull back here. So a lot of these things are pulling back. Some of them look like they might be kind of bottoming out, the rare earths, copper. So those are they're starting to firm up. I'd wait for a signal for it to move, to see an up day or bearish or bullish engulfing, something like that. Or if we see that, that's when I start to deploy money. I'm being patient here. I'm looking at the sectors. For me, I like platinum a lot. Palladium's going up a lot. It's going to drag platinum with it. Since palladium has problems and platinum's a substitute, it's just a matter of time before platinum wants to converge with the price of palladium. So I think it may take a year or two. So now's the time to kind of look at, I think now's the time to look at platinum. Platinum's probably the best buy that I can find out there in terms of physical precious metals. Looking at the other sectors and commodities, I think copper is really good, nickel's really good, palladium, platinum, and uranium. Uranium looks fantastic. If we can get a little bit of a pullback here, I'm going to look at some of these companies and start continuing to add into them. At any time that I see, some of them have bottomed and moved up. Some of them are putting in very good chart patterns. You can see that in my other videos. Those are the ones I'm looking at for myself to pick up. I think the ones that I really like are Zarga, Blue Sky Uranium, Pure Point Uranium looks like it's putting in a nice bottom. Some of these base load was putting in a bottom, look pretty good. So those are my favorites. In the oil sector, it is under pressure. I'm not going to sell anything. SM Energy, CPE, CDEV. I know you guys like me talking about it, but we could pull back. It could be a couple days. It could be a week, and it could pull back quite substantially. These things have been on a tear to the upside. It is only natural for them to give some of it back, to get some people flushed out of the stocks, and then eventually base it out a little bit and then continue higher. These things take time, and I'm pretty patient. So my suggestion, if you guys are in these and you want to hold on, you just got to be patient. If you guys are short-term traders, it's up to you on what you want to do. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't. Ride this commodity bull market up in this community on this channel. I think we've got a pretty good community, pretty good channel, and I go over market updates just like this. I am riding this thing up. I'm not selling in and out. That's been my strategy. You guys can adopt whatever strategies that works for you. I'm just buying and holding and accumulating over time. Thanks for listening. This is Finding Value.